Well, hey everybody, and welcome back to another video going over the financial markets. I want to talk about two main things today. We're going to talk about the ECB raising their interest rates, and we're also going to talk a little bit about this gold, bonds, and dollar stuff that's going on, which is super confusing in the markets right now. Let's jump right in. So the ECB lifted key interest rates by 50 basis points during the March 2023 meeting, a sixth consecutive rate increase, pushing the deposit rate to 3%, a fresh high since 2008. Policymakers remain committed to bringing inflation down and said they were monitoring current market tensions closely and are ready to respond as necessary to preserve price stability and financial stability in the euro. Interesting stuff there for sure. All right, guys, and we're now taking a look at the Euro USD price chart. And you can see there was a little bit of a response to this. The euro found its bearings along the 1.054 mark compared to the US dollar, and rallied a little bit on all of this news surrounding essentially a rate hike in Europe. Now, Europe, similar to the United States, has high levels of inflation. In fact, let's compare those now. Okay, so we're on the inflation page of the Edge Finder, and I want to isolate just Europe versus the United States. And I want to talk a little bit about this right now. So what we're currently looking at is the latest reported inflation rates here in the US as well as in Europe. And you can see that 8.5% clearly is higher in the European area. So inflation is a problem around the whole world. And when we're trying to trade currencies, it's all about comparing one versus the next. So when we look at Europe, which has higher levels of inflation compared to the US, we can imagine that, again, the ECB, or the European Central Bank, has a duty or a responsibility to try and squash that inflation, just like we do here in the United States. But one thing that's really interesting is that inflation seems to have curbed earlier on in the United States than in Europe. The red line here represents European inflation, while the blue line represents US inflation. Something to think about when talking about these rate hikes, of course, is that it's kind of a race right now. When you have Europe coming up to 3% now, it's still behind in the race compared to the US, which is currently sitting at a 4.75% interest rate and expected to climb further in the upcoming meeting. So when we look at the financial, the price charts, and we look at the financial economic data that we have on these two economies, my opinion on the euro is continuing to be short biased based on the fundamentals. I still like the dollar more. I think the Federal Reserve is likely to raise rates more over time. Now, again, market is sort of up in the air about that, and I mentioned a little bit of the confusion surrounding gold, the dollar, and bonds, which we will discuss in this video. My personal opinion from a price action standpoint for trade setups and ideas on the euro would be looking for a breakout to the downside, and if it occurs, if we can clear this low, looking for retests and looking for continuations on this chart overall. So that would be my take on the euro. Again, despite the rate hike, I still think that the dollar is more poised to rise than the euro, just in my personal opinion. Let's go take a look now at some of the other charts that we have going on with all of this craziness. Here is a look just at the dollar by itself. You can see we had a really impressive run up yesterday, despite weak economic numbers. Retail sales came out less than expected, and so did PPI. So why did the dollar rally? Why did the dollar go up on bad news? Confusing, right? Well, again, this is why I give you guys coverage every day. Make sure to subscribe and hit the thumbs up button if you don't already, because I'm giving it to you the best I can each day, reporting on the markets. And what caused this rally was not the economic numbers that came out. It was the fear surrounding bank collapses. That was a driving force in the markets yesterday, as people essentially became fearful of the ability for the Fed to stop this problem and also stop the inflation problem. So a massive run up in the dollar occurred in a very brief period of time. My thoughts on the dollar are, right now we have momentum to the upside. I think pullbacks look like buying opportunities until further notice. We had a huge level of support hold around this 103.6 mark. And so now as we pull back, I do think that there's an opportunity to potentially look to get long the dollar again. We are currently sitting at the 38.2% retracement off of this big pop that we saw in the last few days. The one level that I really like to, looking at the long side, is possibly just a retest into this zone. So if price does start to sort of retrace here for us, there is that opportunity to get long, in my personal opinion, on the dollar. Now, the confusing thing is I'm also bullish on the gold market, which usually makes no sense, right? Why would you be long dollar, long gold? Well, again, Think about what we just talked about. We just talked about, this is my poor excuse for a bank. Okay, let's imagine this is a bank, right? So if the banks are in fear of being shut down, collapsing, having liquidity problems, if that happens or that fear continues to escalate, people are going to look for other places to put their money than banks. And where would they park it? Well, they might pull it into cash. They might do bank runs. They might, and they're not doing bank runs like they do in the, in the 1930s. I'm talking about electronically now because we have the internet. People pulling money, trying to get out of banks and hold on to it somewhere else. And also another big one, gold, which rallied tremendously in the last couple of days. Why would that be the case? Well, perhaps there's a lot of fear around this, and a lot of people may just want to put their money into gold, which has been sort of the ancient hedge against inflation kind of idea, where if you buy gold instead of putting it into just a bank or cash, you could potentially outpace inflation, or at least stay not destroyed by it, right? Having your money in the bank account is like the worst idea ever, because again, the longer it sits there, the more you just lose to inflation. Anyways, that's a personal hot take on that. The gold market never even made a 38.2% retracement. It just kept going and going. My thought process on this, and I'm kicking myself, guys. I'm kicking myself. In yesterday's video, I highlighted that I wanted to get long gold, just didn't do it. I was not looking at the charts closely enough at the time when this poked into it the first time, and when it came into the second time, it was late last night and I wasn't looking at this overnight. So I don't use pending orders, and in this case, this is an example of when I usually kick myself for not doing that. I like to look at the markets and make sure I'm up to speed with everything before entering a trade. So that's why I use market orders. It's just a personal preference. But for those of you guys who caught the gold idea that we shared, I put this on my Twitter yesterday, as well as I talked about it in my YouTube video yesterday. Gold looks strong. And if we take a look at the Edge Finder's take on gold, it still looks really attractive. I want to show you guys, if we go to commodities and we look at gold here for a second, the signal that we're getting is still a strong buy. And you can see projections to the upside from our trend projection segment. We have COT data, which points towards big money still being very long gold. You've got retail sentiment showing that the crowd is shorting gold, which is a bullish signal. Seasonality, right? The month of March, historically a positive month for us. The trend is to the upside, and GDP and unemployment numbers favor bullishness, while inflation numbers and interest rates do not. So overall, we have a bullish bias on the gold market. And so going forward, if price does give me another retest, another option to potentially get long here, I'll be watching levels like 1912 for a continuation buy in this upward trend. So that's something I'll be watching myself for a trade setup. Remember, guys, if you want access to the Edge Finder, if this data would be helpful to you, we do have a way to do that. Let me show you how you can do that if you have not already. Head over to a1trading.com. This is our website. And if you go to our website, this is where our team has all of our stuff. And you just go to this bottom right-hand side and you go chat now and just type free trial. You can test out our software for yourself to see if it would be something helpful to you. If you'd like to do that, again, just head over to a1trading.com, go to the chat box and type free trial. And one of our support reps here, whether it's Drew, Emily, or Hallie, will take care of you and get you set up with a trial on our software data that might be helpful to you. We have all sorts of stuff. You can take a look at retail sentiment. I mentioned that gold right now, right, is very heavily bought by sold by retail traders. Take a look at the gold chart here and you can see 24% of retail money is retail positioning is on the long side, where a whopping 76% is on the short side. So interesting data nonetheless. So that's one thing I'm paying attention to when talking about gold, is looking for longs on a possible pullback going into the remainder of this week. If you enjoy my videos, make sure to hit the thumbs up button and subscribe. Thank you very much for tuning in, and we will see you back tomorrow. See you guys. Before you go, make sure to check out our free Discord channel linked down below in the description. And if you want to try out some of our products, our software tools here at A1 Trading, we have free versions available also down below in the description. Check them out for yourself down below. Also, if you enjoy our content here, we work really hard behind the scenes to bring this content to you each and every day. And if you enjoy our content, it would mean a lot to us if you hit the thumbs up button before you head out. Thanks for watching.